dealers retail about 90,000 vehicles in excess of wholesale to keep dealer inventories lean as the festive season sales growth was below expectation. Volumes were affected not only due to weak domestic market conditions, but also due to issues faced by export markets. Automobile business is highly capital and labor intensive, and volume plays a critical role, especially in a growing market where the business planning is expansion oriented. When the business planning is done, assuming some growth, all growth enabling expenditure increases proportionately. If, due to reversal in market demand, the volume does not grow, the impact of increased expenditure is visible in financial performance. Besides weak market conditions, this quarter was also marked by several other adverse factors. The commodity prices and foreign exchange movements were also adverse during the quarter. During the quarter, the company sold 428,643 units, lower by 0.6%. The company registered net sales of rupees 1,89,264 million, lower by 0.1% over the same period previous year. The combined effect of decline in volumes and its scale disadvantage, higher sales promotion expenses, adverse foreign exchange movement, and commodity prices impacted the profit for the quarter. Cost reduction and higher non-operating income could partially offset the negative impact. Net profit stood at rupees 14,893 million, lower by 17%. While Q3 financial year 19 was an exceptionally challenging quarter for us, it will be our constant endeavor to enhance sales and improve productivity and efficiency in the future. The company has launched two new models, Ertiga and Wagoner, to create excitement in the market and bring volume growth. Both these models have been received well in the market. Ertiga has been in waiting list since its launch. The company also announced price increase across models to pass on some cost impact. We can now take your questions, feedback, and any other observation that you may have. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'd also like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 per participant. Should you have a follow-up question, we request you to rejoin the queue. The first question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity. So if you can throw some light on the recurring and the non-recurring nature of expenses related to the forex side, or rather, whatever is the forex related expenses which is pertaining to the previous quarter, which you have accounted for in this quarter as part of the royalty payout or as part of the vendor settlement. That will be the first question, sir.
So, see, there is only one exception that I see in this quarter, that we had to make certain provisions for leave encashment and retirement benefits because we had done a wage settlement, and that has an impact on the past services as well. So there was a provision made on that account, which is about 48 crores. So that's the only item of exception that I see in this quarter.
And forex related adjustment pertaining to previous quarters on account?
No, there is virtually negligible.
Thank you. The next question is from the line of Ashish Nigam from Axis Capital. Please go ahead.
So this QOQ margin fall of 500 bips, can you quantify how much is commodity, how much is currency, what is the discount, and how much would be operating deleverage?
If you compare it with Q2, you find that the net sales have come down. So other expenditure, if you say on an absolute value, it is down by 100 crores as compared to Q2, but as a percentage of net sales, you find it up by 1.5%. So that's the reason of volume versus the nature of expenditure. Other than that, commodities compared to year on year had an impact of about 300 crores. And effect of foreign exchange rate is roughly about 0.7% on the margins.
And which of these cost pressures reverse in Q4 or Q1? So firstly, what's the price hike we've taken early Jan, and does that cover at least part of this 500 bips margin fall?
So there will be combination of factors next quarter. One, of course, the price increase that we have taken will help us in Q4. We also are seeing that the commodity trend is now reversing a little bit. So we may see some respite and advantage coming out of that. Discounts this quarter were also all-time high. So I think we will be at much lower discounts compared to where we were in the last quarter. So I think combination of all these factors would definitely help us moving forward in terms of where we are and where we will be.
I'm just saying because we've typically worked in this 14 to 16% margin band. Is there a rethink of that band?
No, as we said that this was an exceptional quarter, and all the negatives came to us in this quarter. We had impact of foreign exchange, we had impact of commodities, we had also a very high sales promotion because the retails were very high, and therefore it's clearly visible on the wholesales. We also had as I mentioned to you, some impact on the employee costs as we had one wage settlement done, and second we had one-time gratuity and leave encashment where we had made a provision of about 50 crores. So some of these impacts, are reversible. Some of these impacts will have to be seen in the light of external environment and market conditions.
Just one more question, if I may. There's this one line in the presentation which says higher costs in resources and capacities, which were earlier planned to enable a higher estimated growth. What does that mean? Is that the higher fixed costs at SMG, or how do we see that?
No. I think the point that earlier my colleague was making was that if you have planned certain growth and that does not happen, your fixed cost does not change. So therefore, there is an operating leverage disadvantage that you have in that particular quarter. So this particular quarter that happened, and we had this disadvantage of operating leverage. Had it been a higher sales growth, you wouldn't have seen growth in as a percentage of overheads, that 1.5% that he mentioned.
Got it. I'll come back in the queue. Thanks.
Thank you. The next question is from Amin Pirani from Deutsche Bank. Please go ahead.
Yes, sir. Thanks for the opportunity. So my first question is the housekeeping one. Can you help us with the discount per vehicle number that you share every quarter?
Discounts this quarter were about 24,300 rupees.
Okay.
Yeah.
Okay. Thank you. And so secondly, just going back to the earlier question,